Just a moment. I need to. Okay, so we are. Where am I? Am I sharing? Am I sharing my screen? Okay, good. Yeah. Let's do this. All right. Uh, Beautiful. So we had after binary session, we actually looked at the forex market, and the market was somewhere around. What was the time? This was yeah, this was around 9. This was when we analyzed the market. 9. Okay. So I'll do the same thing for GBP USD. Okay, let me go back to EU. Is he gonna keep it or taking it out? It's 9. All right. So I actually did the analysis based off on where we're coming from, and I showed, our last session, I showed you guys the monthly. What's happening? The monthly play on Euro USD, how it's on premium, it's on discount. Market is on discount for the bullish. So looking at our range, if we have to take all of this out, sorry, I did this again. So you could find out that the market build up on the monthly. Okay, so this is the monthly range. Okay, so we had a shift, a displacement back up here. So this changed the direction of the sellers. Okay, and close the monthly close. So over the last couple of months, market has been bullish. And when you check the range of the market, just a moment, guys. When you check the range of the market, okay, from the monthly perspective, am I supposed to be doing this? Let's see. I need this. Where's price range? There's time box. I'm looking for. Okay, good. When you look at price perspective from up down, you're gonna find that market, the red angle is discount, and you buy at discount, you sell at premium. Okay, you buy at discount, you sell at premium. So all the way here, market is still on the monthly discount, and it's been bullish. Now, when you check it into the this thing, market, even on the weekly, market is still bullish. It's still bullish. It means it's in a bullish range. It's still on discount. Buyers are still very, very involved. Okay. Now market will start having a big, huge sell when it hits here. Because why? Between here and here is discount. So I do know on a large scale, market is on discount, which means buyers have more power, all right, within the market. Now, when we tune this up, I want to take this off. And we'll tune this off and we'll bring it down to the daily. Now you want to ask yourself, what is the daily perspective? Now we've checked it out. Okay. So if we're looking at the daily right now, you're going to find out there is a range perspective on the day, starting from where am I? Okay. So we had a range on the first day. So you look at this right now. So this is where market is. Did I play at the week well? Hold on, guys. Okay, good. So when you look at this market, you're going to find out that there are choppy activity between this area and this area. And market is still on discount. So even on the weekly scale, okay, I kind of like this scale. Market is still on discount. And when you understand that market is on discount, if I'm looking at the day right now, you're going to find out that the last day that dropped was this day, dropped down, took away that. Market has been mitigated. So I do know one thing for sure, that when I'm on Euro USD, good. I do know that when market comes back, so if you're looking at the market structure right now, what do you have? A low, a high, a higher low, a higher high. So I knew something that market are taking out what? The first thing, this is the lowest on the daily structure, market has switched on the daily structure. Market has changed dimension because now this is a bullish market structure. A market is still bullish. So what do we just have to do? All right, when you're looking at this at your perspective as a trader, a daily trader, okay, I told you guys this morning that market has already started buying. Okay, where are you going to buy? This area is a buy. Okay, that's and now we're bringing it down into the tiny bits. Okay, so this area is a buy. But when we're looking at it from this perspective over the 1 hour scale, why did I like this market for a buy? So based off on market structure, you find out one thing, we have a range. So this is a range. Let me take this off right now. So we do know that automatically from the bullish scale, we have a range. So this is a range. Okay, market had gone up, played, gone up, played, gone up, come down. So there is a mitigation of this range right now. It has been mitigated and taken out. All right. And one of the things I just needed to do, which you take market to a smaller time frame. Why is this? Okay. This is what one of the things that happened. This market is looking a little bit different. All right. We have a low, we have a high, we have a low. So there was a confirmation already. But when I saw this morning, okay, so normally, so this is another thing. I'm showing you guys something right now, but there's another thing that may happen in this market. There's a pull that may happen to this market if this market come back down here. Just hold on. We have a second leg, but we don't have a third leg on the daily. Okay. Please mute your mic, guys. I'm trying to understand something. Okay, so we have this try to bull up, taking out. Okay. Oh, I get it now. Mute your mic, please. Okay, let me mute everybody. Okay, so we had our low. Let me use something. So take this out, take this out. We had our first low, our second low, market refused, taken out. Okay, now we have our first low, high, low. So there's a bullish market structure when this market came here. This market blew the scale. And that is because if you check this analysis, we're on a bullish scale. You look at this right now, this. Wait, is it EU I opened just now? Something. I knew something was wrong now. I was being confused. You know when you're confused and you be like, what was I looking at before? You guys talk to me on the chat. Because it wasn't EU I was analyzing before. What was I looking at? Hold on. Were you guys seeing what I was analyzing? Because I was just a little bit confused. My confusion was getting to me tick. uh because this is EU. What was I analyzing before? No, it's not GU. Okay. Because this was what I was analyzing, and it was just it was looking as if no, something was wrong. Okay, so yeah, I wanted to see I wanted you guys to see the scale of activity that has happened. So we had a low. This is actually a 4-hour low. So I've already showed you guys market had taken a low. So this was a hit on this low. All right, you check this right now. There was a hit, okay, which means we had a low, and you break it down. So automatically, market was on a bullish scale. All right, on the monthly bullish scale, and we had a 4-hour mitigation. This is strong equal lows, okay, and market came tipped off, created what our first high. So when I came this morning, I told you this guy, if there's another candle that opened, that was the signal this morning. I say if an hourly candle opens above here, it's going to buy, okay, and it didn't do different. Because why? This was a low, this was a low, this was a low. I always tell you the third low in market structure in a very bullish range or bearish range, okay, it's very significant. It's going to take market on a dive, and we have that right now. So if we're looking at this range, so this is the range that has been mitigated. All right, TPs are going to start expiring around here. Okay, if we're looking at this range, TPs are going to start yeah. So market should get up here before another maybe drop down. Or what's going to do right now, what I perceive the market is going to do right now, since it has significantly dropped here. So the first TP has taken out. So this is first TP. You always want to take TP at the next first TP, and that's over 1-to-1. Okay, I think this market, what's going to do? So the next projection for this trade right now is either it's going to drive here totally, okay, where you have to now leave your TP range. So if I'm, hold on, guys. If I'm looking at this range, when this market took this market up here, this is the range. Oh boy, double face range. So we have a this is the low of this market when it's sold. So if you start buying, it may buy up here, but you want to look at what is this range the first time it bought, because it's a buy market. So when the market bought, it bought up here. So that's the range. If I'm looking at this, when the market bought here, where did it buy up to here? So you don't want to, don't play politics with this level. The moment, take 80% of your trades when the market get there, because that is the range in play. Okay, except you're looking at a sell range. So this is a sell range. The market may not get up there. All right. But since it's a bullish monthly, you can now take 80% and drive this market. But there's another trade in play right now since our first target has been taken. So when market makes momentum, all right, so we have this play. So between this area, the next, if this market refuses now, so this market is going to go up, come back to this level. This is another play that may happen. So you guys, if this market pushes down to this level, yes, it has broken this area, but I don't think the momentum will just drive totally. That's broken. There's a high here. When market breaks a high, it may take this as a pendulum and drive. But if it doesn't, you guys watch out for the next trade. Okay, market comes here, hits here. This is a fair value gap, okay, and also a structural area. And that is, let me look at the 4-hour. Good. Okay, no. Yeah, market are taking out. So there's been a change of character on the 4-hour. This is massive. Okay, this is a good pull on the upside. There's been a change of character, and normally what market does when it changes character is going to come back down to a gap. All right, and the only gap I'm seeing down here is here. So there is a fair value 15-minute gap within this area, and this area. So that is an impulse, and that I think that impulse. Okay, no, it's not the impulse that took away. It's the 4 hours. So this 15 minutes didn't. So you guys want to watch out for this area, but I still think market is still going to go up, then probably come back later. So there's a trade within this area. upward in case market doesn't go up now. It want to pull back. So if it pulls back here, put your stop loss, because if it breaks this, then yeah, you may do a 1 to 2, almost 1 to 3 between this area. So that's a fine line for another type of trade. If it push another buy, in case this market wants to drive up, another buy here. But the safest buy, I'm already in. I've already done TP1, broken even. So this is my play on EU. The next buy is going to be here. And if it doesn't accept that buy, market may want to break down. I should. This is a very strong buy. This strong buy that took away this for this change of character on the 4-hour. It's still probably going to do another impulse upside. So it's a strong move. I kind of have some level of belief in the move. So that's my EU trade. Another trade I gave you guys was GU, still moving anyway. I told you guys GU, and I said this area. So though it's not really, it hasn't moved much, but I'm still in the trade I've taken. I didn't get in on this trade here. I actually got in when he did this. Okay, so this was my first, when this, no, okay, I think I got in here. Okay, so on the 15-minute, this was a takeout. This green line here was actually a regional, let me call it a regional liquidity area, very strong liquidity area. I think was it 4-hour or okay, good. 4-hour daily. Okay, it was the previous day. So this was a strong move. This area was a strong area. I think I was in this trade yesterday, but the market kept, because of the news, the market kept coming down. So I knew that, okay, the next strong area on this market is going to be, so where did we have? Okay, it wasn't a daily, it was a 4-hour. All right, so it was a 4-hour low. So this was a 4-hour low, and that's what I played on. And if we bring it down, I knew that, okay, now that market had played a 4-hour, we'll now have to look at what rate. Okay, so the first thing that happened after the market raided was this. Okay, I was a little bit skeptical because why? Normally, after every move, okay, when market pushes on the upside, you want to expect a 50%, at least 30 to 50% retracement, but it didn't. This was short, okay? So I could call all of this. This is all of the move, the first move, all right? And this is the second move. Then this is the third move. Then this is the fourth move. Okay, I took third move, sorry. The third move on the low, 1, 2, 3. After the third, there's always momentum. Okay, are you guys seeing? After the third, there's always momentum. So I think this guy is driving. Oh, wow. So that was the trade I gave this morning, and it's still playing out. Though it does not hit major TP. If you are taking this trade here, okay, your stop loss would have been here. 1-to-1 would be around at least I'm not sure this is 1-to-1, but sometimes trades are not always likely 1-to-1. I don't do 1-to-1 most times. Okay, I do 1 to next level. So this is not 1-to-1. So 1-to-1 is going to be somewhere around here. Yeah, you get your 1-to-1. So here, okay, I'm going to be, but what I did was I already closed most stop losses, and I'm in safe mode right about now. And these trades are playing out well. Okay, gold was also, I ate gold like breakfast. I was in this move from here. Though yesterday I got on gold. I suffered good here. I was on gold here. All right. And it killed me. It just started killing me. And I was like, what? Okay, let me use my next trading strategy. I said, you want to take money from me? I have money to give to you. Okay. And I put away my stop losses. Don't say I advised you. I'm not telling you. Okay. I had the power to do that. I put away my stop losses. And when I saw that I had to go back, that's one of the things I tell you guys. You get to a level in trading. Strategy will play for you, but another thing, being a businessman, understanding business will also play for you. Okay, I can lose in the market. I know when I can lose, take a fall, then I know where I can stretch my limit of a fall. Okay. Let me do something quickly. Should I take this off? Let me open another gold and show you guys something. Gold is one pair that I'm going to start teaching you guys over the next couple of I'm going to start teaching you guys gold, because if you can master gold and you have some bit of equity, you would love trading. So but it's a very addictive pair, can change them for you. XAU USD. SAU USD. Okay, no. Okay. So let me show you guys. Henry, why did you, that bad habit, why did you move your stop loss? Yeah, it's bad habit, but based off some level of some knowing. So let's take this market right now, mark up all the level of range. So this is a range, all right? This level is a range on the daily. Bring it to the 4-hour. This level is a range. You know, gold is different from every other pair. When you see a very large move like this, oh man, that's crazy. This is a crazy move. Okay. So gold that pair you trade within the 15-minute time frame. So you look at 15-minute range. So this is good enough. This is a very powerful range. All right. So when you break it on the 4-hour, when market was dropping, okay, when market dropped to this level, I thought, okay, yes, this range is gonna activate, but this guy disappointed me and started falling. So I knew the next range was going to be here. Guess what? It respected. All right. I think somewhere around here, within the 15 minutes, there was okay, no, I didn't play out this area, okay, because it did not give me market structure. All right. So I just waited for this area. I knew that, okay, we're in the third area right now, and this was good. I knew this area was a very beautiful area. Okay, so I said, okay, let's see this. And look at what market did. Took out that area. That's the first thing it did. Eradicated. So mitigated and eradicated. We switched to a smaller time frame. You may not. Okay. What are you looking for? First is the mitigation. Second is the raid. All right. The next thing you want to see is there a bullish market structure? Because you want to buy. So this is 1, this is 2, this is 3, this is 4. So this is 1, 2. Okay. So it is safe to say, very safe to say, the moment you have this, okay, you could actually get in on a trade on the break of this. It is safe to say, based off on market structure, because the third is always when you have a break of this. But what did this market do? Consolidated. Oh boy, created another low. Okay. So it is safe to say when market breaks this, you're going to have what? A trade. Okay. Because this is not the second. What did market do? Did it create another low? Consolidated, I think, created this. So what did I say? It is safe to say. So this is still the what? Swing high. It is safe to say when market takes away this, all right, you're going to have a trade. Very safe. And that is what market did for me. And I got in on the low, Where is my triangle? So when you look at this right now, family, all right, so this is all total. And you see, this is the tip of this candle, and that's the tip of this trade. Okay, when it did, pa, pa. Okay, look at what this guy is doing. So first TP here, you can imagine how much that is. So all my negative were mitigated by this move. Okay, so I left here. That's about 8,365 or 136 pips. Okay, now I'm still running on. So this one that was on negative that I got in here is still running right now, and it's printing money. Are you guys seeing what I'm showing you guys? Okay, So it's confident to say, yeah, this guy's going to drive here because why? That's the range. That's the range. I'll be a greedy person if I'm if I don't take 70% of my TP here. Why? Because it played out a bullish market structure. When you're analyzing gold, you don't analyze gold. The narrative for gold doesn't play the same way you play for Forex. In fact, if you want to benefit from gold, okay, 4-hour range, 1 hour mitigation, 15 minutes analysis, you could break into 5 minutes and you get your trade. Okay. Don't go daily, monthly on gold. Gold is it's a volatile pair. Okay. Before you see moves like this, okay, these are powerful moves. Okay. So you look at ranges that are short. You take, you leave, you take, you leave. Every day you just keep taking and leaving. You don't want to. Gold is not a pair I would teach anybody to swing for now. Okay, for now, you want to take those daily activity. Then when you have, so what I'm doing right now is, so let's say this was supposed to be the range of this. Now market created a low. Okay, now this is what market is doing. I don't see this range. This is not. This is the range of this market. Okay, if I switch to 4-hour, it's still the range of the market. I could say this is the range of this market. Now watch what makes a different analysis come to play. Okay. Because when it comes to market structure, you look at the range you're trading on the time frame. So this is a range and it ends here. If I'm trading this range, then this market just started on the 4-hour. There is no bullish structure now on the 4-hour. So this range accumulates between here and here. Okay, so I have this range between here and here. Okay, so this is the first market mitigated and did what? Raided. Okay, so what is a bullish market structure? I need to now have what? So this is the first low. I don't know the first high yet. So this may be the first high. So it will come back down. 50% of it will be around here. Okay, then pull up. What's it going to do if it pulls up? Break this. Come back down. Pull down. While you're trying to get a trade on gold, someone has slept after making too much money on a 4-hour. Okay, you can see how long it's going to take you to get a 4-hour that will drive you. So somehow you get a trade around here, break this area, retest it, then you drive it here. It's too long. You get fed up. Are you guys getting what I'm saying? Put 10 on the chat. Okay. So gold is not something you want to analyze on the longer time frame, like trade on the longer time frame. Check it small, break it down to the smaller bits. Okay, you guys are not following, but it's a very powerful pair. So I'm gonna. That's why over the last couple of weeks I've been including it in my analysis, and I believe those of you who are faithful enough, you're milking it. Okay, so I do know something right now that yes, on the 4-hour. Okay, why is it looking different? So on the 4-hour, there's been a low, there's been a high, there's been a low. Let's take it back to this. Okay, so a new trade on gold, where would be the next printing on gold? Okay, I'd love gold to come to this area for this move. There's going to be a very bullish activity within this area. That's about 50%. Okay, would that be up to 50%? If this market retraces from here, okay, 50% will be around here. Oh boy. So it may not even drop down, but I would want market to drop down to this level because that is a lot of discount. Why also? Let's see this impulse. So there was change of character here. So there was a change of character here. There's an impulse. So let me take this out. So I'm giving you guys the next trade I'll be waiting for on gold now. Where are my tools? Let me take you up. You've been hiding so long. So there is an impulse, it's going to definitely come down to this impulse. I'm on the 1 hour, right? So let me first get the 1 hour impulse. So after this, there was this candle. There is a fair value gap between here and here. Okay, that's fine. And I love that fair value gap because under it or in between it, there is a change of character. So there is a high here. So I do know that when market hit, it's kind of like a break of structure. Okay, so there's a break of structure here. If it comes back, fair value gap, there's going to be a strong, hold, mitigation hold there. So that is one. That's the lowest gap there. So that is between, to get the price range, 2,302 and yeah, 2,307.31. So if it doesn't do that, we have another impulse. In fact, a couple of other impulse. So there is another impulse between this area, okay, and this area. Okay, and why there is going to be, this may be valid, very, very valid, because there's a 50%. If this market drops down, there's a 50%. So this area is a 50% of this move, okay? And there's a floor here also. So this area may be tap out, continue up. So this is what, because see, this is the floor. And market had broken above that floor. So if you look here right now, so somewhere around this area, this range, you're going to have a buy. So when you see move, just look at this, okay? Find a technical area, boom, there's a bullish technical area here, and there is a fair value gap here. So you could touch, put your stop loss below. That's fine by me. I like that. So this is what I'm looking for in gold, either this area or this area. So I could say a lot of volume is going to come in this area. I'm just watching out for that. Either the 2, 3. So where's going to be your stop loss? So the lower you take the trade, the lower the trade comes, the better your risk to reward. Okay, that's it. The lower the trade comes, the better your risk to reward. So I would want this trade to come here so that my risk to reward would be lower here. So if I buy here, stop loss is going to be below here. 135 pips. And TP 1-to-1, I shouldn't exceed here. I like it. So just 1.4. But if you take the upper one, maybe 1-to-1. If you take this upper one, maybe 1-to-1. But that's the range of another play of trade on gold. And if it breaks this area, then we can now look at the next move here. So you could say that this trade can drive up to this area, this range. But that's dependent on how far you can hold your trade on gold. So those are 3 analysis. So we had gold in the morning. I gave you guys gold. I gave you guys GBP USD. I gave you guys Euro USD. And I also gave you guys USD JPY as well. Anyway, so USD JPY is still playing. It's still playing around, but I do know something. And I said most of the time when market plays around is because it's in overcharged region. So I'm going to give you guys a new play out right now. So if I'm looking at this market, this was the previous high. Before you're going to start seeing some respectable trades, it has to come down into this range. But right now it's playing 007. So I have to play, okay, what's going to be my new power range? So I know the market had a high, took it out, almost kind of equal. So everything is, this is the high, this is the rate, and the market started coming down. So I knew if market touched this area, it's going to start selling. So that was the first look at I was looking for. But nonetheless, what is market structure? There must be a bearish market structure. So this is the first low, this is the first high, this is the first. So market is still printing. So we need a break of structure. If that doesn't happen, you're not going to start. That's why I keep telling you, it's not just about getting trades. Okay, so in market structure, on the 1 hour, we have a high and a low. a lower high, okay, is yet to print what? A lower low, because there has to be a break of structure before you start seeing some good trade, okay? Then you now see this market come to either this level, okay, or any of this level to get a good trade. Then we'll start selling down. If that doesn't happen, this is just going to play with your trade, okay? But it may be playing out on, so someone say, Kemry, what if we're doing it on a smaller time frame? So on a smaller time frame, we have so let's break this down. So we have a low, okay, we have a high. Okay, I think something is printing on the smaller time frame. We have another low. Let's see how healthy it is. And we had a high. Okay, good. What we need is a break of structure. Okay, if this doesn't break, it won't print. All right. So there has to be a break of, watch out for a break of structure. So even on the 15 minutes, yes, we have good structures, but it is yet to break. She's still stuck. So we have a high, okay, another high. So this is a swing high. This is a swing low. This is yet to be a swing. So, and if that volume doesn't drop below this, you are not going to get good trade. So I'm looking forward to this market breaking this area, okay? Then I'm looking forward to taking a trade around here. So when market breaks this area, I'll wait for it to come here to shift and I'll sell that. All right, so that's what I'm looking for in USD JPY. Quite a very stubborn pair so far. I think those are the pairs that I gave you guys. But as much as yeah, some of you were not in the session, but were you guys able to follow the analysis so far? Every pair that trades in the market before it's going to sell, before it's going to have a major sell or a major buy, it's going to do something called a shift. It's going to shift, and in each time frame, you want to understand a shift. So let me look at USD CAD right now. How do you really analyze a shift? Okay, you look at how did the market buy. You want to look at how the market bought from the low. Okay, so what is the low of this market? As this market shifted, this market is in its way. All right. So on the 1 hour, this was the lowest. Okay. So let's take this out. So this was the lowest. A market went up, came down, broke, came down. Okay. Now this is one of the things a lot of people don't. Now it's creating bullish market structure. This is a bullish market structure from this leg right now. If there's a break of structure on this leg, okay, if this market breaks structure, all right, one of the things you're going to find out is going to come to this area, okay, and buy this area or probably this area, but I think I think this market is still going to drop down. Okay, because the formation of the shift right now is it's not looking good. So another thing people don't know, what is the opportunity in this low or this low? So this was a low, this was taken out. What's the opportunity? Many people trade without understanding opportunity. So let's go back in time and check. Okay, what was the opportunity in this area? Where has that had significant buys? Okay, so let's look at this market right now. Okay, so the market had the floor here. Okay, we'll look at this floor. Okay, the opportunity in this market can drive all the way up here. So for every time you're analyzing a market, you want to look at the range, okay? The range of this market. So that's where we're buying right now. This is a market we're buying. The reason I'm telling you guys now, okay, part of one of the things we're going to do in the course, how to map out a range that you want to trade. So if I'm looking at this trade right now, this trade right now, this market came here. There was a range here. It's yet to hit that range. Okay, it didn't. So you want to trace this market to where it came from. Let's see. Okay, so let's say this is the mitigation of this. If this is the mitigation of this, then this is the potential. Okay, now I want to ask you a question. If this is the potential of this trade, all right, so many people don't know that there's some trades you don't trade. You don't have to trade them. They don't fall. Where is they're not healthy. How do you know trades that are not healthy? Uh Aside range. So if I'm looking at between here and here, ladies and gentlemen, green is my discount area. It means green is where my opportunity for buying the market lies. Are you guys getting me? Okay. If you shift forward right now and I put a line there, do you guys think? So this market just started creating bullish structure. So let's say if the trade is around here, do you think it's healthy for me to buy it? Based off on where market is right now. Market is above discount, means it's on premium. It's not healthy. No matter how it forms tomorrow or today, it's not healthy. My potential for profit is just between here and here. Market has left. It's not healthy. It's not all analysis fall in technical. It's not just the technical alignment. There's the opportunity for potential. The potential of this trade, okay, you have to look. Buyers that bought this market from this range, that this market just triggered, this is their extension. This is their potential. And you follow the potential of the market. If this was where I triggered, okay, if this is the rate, market just started reading, then yes, this is the new range. So if this is what you want to play out, so you could play out this to the top. So here is discount. So market just started. So this is a rate. This is a high. Okay. This is the second one. This is the third. If market comes down, yes, for this range, market is still within a buy range. It means if you buy here, you're buying because this is the range you're looking at. Okay. And market is on discount. That's good. Okay. It's good. It means if market prints, market can come down and print a new low here. Good. Then the third, because market has actually changed, it has changed character here. Okay. So the market comes here, create a new low. As much as I don't like this, but he did it. This market is taking, because if another one breaks, oh boy. So let's calculate this. So we've come to so we have 1, we have 2, okay, 3. If this breaks, then I would have to wait for the market to come back down to this area before I'm going to take a trade. Okay, if it breaks before, because why? I'd love to take the low of the premium to give me lesser, because if I take a trade here, I have to put a stop loss below this wicked week. Okay, so and that will give me a strong potential on the upside. At least before I get off my premium, I'm already safe to one. All right. So these are other things you guys would put as a trader, you put into consideration. When you're learning it, it looks crowded, but it's just split decision. Now, when I'm trading, I don't have to say, oh, let me go and get discount and premium. No. When I just look at the market, I'll know, oh, this is far gone. Okay. I look at it on a time frame, this is far gone. But when you're learning it, there may be a little details you would have to, all right, you have to look at this market. So I'm just trying to go through different analysis that the market had played out. You find out one thing in respect. Okay, this market came down here, played out. I think it played out. Yeah, I could say fully played out this area. But what it did was just respect. It did not raid it. Yeah, market didn't raid this area. It just touched it. It just touched it and it's moving. And since it's moving, this is the first move. Yeah. Okay, except to say I want to do this. Yeah, this is first, second, is far. This is still, I don't like the dive. The dive is too much. Okay. Any questions so far? GBBCHF moving crazy, moving crazy. Moving crazy. Any questions so far? Are you guys having fun? So how many of you are building more confidence in that which you're learning? At least with what I'm showing you, okay? from market structure perspective, you're building more confidence in your trading. All right. Talk to me on the chat. Any question? There's a question that came to my mind right now. There's a trade that I have not been looking at, but is aligning and setting up very powerfully well. Okay, let's look at this. Oh. Okay. Okay. So this is a 4-hour high. And this is the range. Okay, that's not what I am looking for. Let's go to the 1 hour. So this is a 1-hour high. And this is the range. And market has prepared some sets. I want AUD fans. Okay, so there is 1, 2. So you guys look at this market. If it breaks this structure, comes back into this area, you're gonna have a third. All right, so there is a shift on AUD JPY. There's a shift on AUD JPY when it breaks this structure. If it does, it's gonna drop. Okay, sorry guys. I didn't know my. So I said a trade is happening right now, just the same way I gave you EU, just the same way I gave you gold and GBP USD this morning. This is actually another play, okay, on AUD pair. I think AUD is printing, has printed high, was very strong, okay? And I think if it wants to drop, it's on premium, like premium. When you say premium, JPY has given every other competitors premium. So there's a premium on this market. Okay, on the daily, on the weekly, on the monthly, it's premium, which means if there is any opportunity JPY is gain strength, these guys are going to start dropping. So what are you looking for? Know when the market has changed the trend by the structure. So on the 15 minutes right now, we have what? A bearish market structure forming. Okay, so this is one. This is the first low. Okay, this is a high now. If this retain this high, we now have our second low, which is what? The lower high. Okay, if it prints down, we're going to have what? Our second what? A lower low. That is what? Bearish is forming the bearish market structure. What do you need? A third. Okay, your third, most of the time, your third lower high, okay, gives you the best trade, gives you. And when it falls on the shift, okay, the neck that shifts the third, that's when you get a good trade. So a good trade is going to happen here for me, AUD JPY. You guys watch out for it. Even if you don't trade it, just save it so that you can come back and watch it. That may happen. The only reason it's not going to happen is if it takes away this high. But if it doesn't take away this high, if it falls down, creates a third, it's going to drop. All right. It always does. So that's going to be my time for today. Since I don't have any question, it's been a wonderful week. Has been a wonderful week. You can make money. See, there is a lot of people think it's difficult to make money in Forex. The reason it's difficult for some people, yeah, it's a difficult thing to make money in Forex. And there's a reason it's difficult. Okay, so everything I'm saying or I'm going to be saying, it's not because it's easy how I got to where I know there are some tricks. I don't know if to call them tricks. You mature in the game based on the things you expose yourself to. So part of the reason a lot of people don't expose themselves to what is needed for them to succeed is because they are distracted with what they think they need. Some of you think you need the best strategy. Okay. Some of you, you think you need the best coach. Some of you think you need big equity. All right. These are the distractions that happen to us in trading. Your younger brother who knows nothing, not too much about Forex, but has figured out what I am sharing with you, I've been putting in the line. There are things I've been putting in the line of education. If that person can grasp it, can teach you, can become your mentor. You can go get all of the degrees of Forex. That person will become your mentor eventually. Because why? What you need in trading is very simple. And it's so difficult to understand because of its simplicity. Cambria, are you devoiding the fact or negating the fact that equity is not needed? No. Are you negating the fact that education is not needed? No. What do you need? The most important factor of a need in trading is your ability to know what you need at the time of your experience. So what do that? Some of you think it's money you need, but some of you have money, they're not making money. There are people who have money, they're not making money. So would you say it is money you need? Because there are people who have money, they're not making money. Some people think it's skill, but there are people who have the skill, okay, but they're not making money with the skill. When I brought this, there is a thing called confidence. How many of you know? Do you know because of confidence? So let me give you guys an idea. There's a way I talk. I have a certain attitude. True or true? There's a certain attitude I have. When you see me talk, you can perceive my attitude that I have confidence. True or true? It is the attitude of the lion that will make him eat the elephant. It's not because he's the strongest. It's not because he's the wisest. It's not because he's the smartest. The lion will eat the elephant because of the confidence that have been built with an attitude. There's an attitude the lion has. They say if you see elephant, he doesn't see elephant, he see meal. He shrink that elephant to what? The size of a meal. And because he has that attitude, he goes. And that's the confidence. There is a mindset you use to trade. There are certain things you can't be taught. It will all have to align with your mindset. Do you think you're poor? If you think you're poor, you come into trading, you lose money. Period. Nothing can change that. I cannot help that. Nobody can help that. You can learn all of the course. If you think you are subject to money, you trade all your life, boom, you're going to lose. Trading will not give you confidence. Your confidence will help your trading. So first, there are certain things you have to know. Money is subject to you. Okay, there is money in this market and you have what it takes to get it. The question is who is getting it? Follow them and get it. Okay, don't lead yourself in something you're not matured in. That's the first thing to separate yourself from losers. Many of you are trying to lose because your confidence will be tested. Some of you don't have I said something today right now. I said something a couple of hours ago. Many of you go try it. You don't even know how I did it. Remove your stop loss right now. Tell me what will happen to your equity when you're trading gold. Who's going to advise you to remove a stop loss on gold equity? on gold. It doesn't make sense. Okay, it doesn't make sense. But there was a combination of, I know the market, okay, not just from knowing how to trade. I know the market. I knew my investing. I invested in gold at a certain price. And I knew the other layer. If it plays out, this is the money I'm going to make. Okay, this is my risk. And gold hit my area, picked my trade, but it wasn't moving in my direction. What did I do? I had to apply my knowledge. Okay, where's going to be my next buy? It's not far off. Market is still on discount on a higher time frame. This is knowledge now, built by confidence, but most importantly, I'm backed up by equity. Okay, I'm backed up by equity. So I knew that, okay, I just have to extend my risk. How much I'm going to lose? If I'm supposed to lose $1,000, I'm not going to lose what? $1,800 or $2,000. Okay, good. Let me push $2,000 worth. Okay, good. I'll put it. I know how much I'm going to lose. It's not, I already lost it the moment I made the decision to pull it off. And when the market came back, I invested another, let's say $1,000 on that spot. So it's either I lose both of them and my skill plays out. If my skill plays out, there is a combination of what you've done before, done consistently, what you know how to do now, and the money you have to back it up. If one is missing in the equation, you are a gambler. Are you guys following me? If one is missing. So if you're not at the stage where you know that, what do you have to do? Build around the people who do. I'm teaching a course right now. There are some level of tribes, or there's an attitude I have towards the market now that I did not have before because of what I'm exposing you to. How can you adopt that? Learn it. Okay. Learn market structure so that you can know range. The things I'm talking in Forex right now, they are not the things that I was talking last year. Because why? The knowing of these things has ripped me off a certain level of, when you're looking at the market with this go. Okay, let me use a low risk. Uncertainty bridges your confidence. When you're uncertain, is it going to go? No. It's me now. It's either this area goes or it doesn't go, period. I put my risk, I let it go. There is no, if it goes, no gamble. And these are the things that increases your attitude and confidence. You do it over, give yourself 6 months. You trade with this knowing. Trust me, it doesn't matter how much equity you start building with. You're going to do more than 100% in 6 months. I promise you, if it is backed by the skill and the confidence of practice, it doesn't matter the equity you have. You are not a gambler anymore. But there's a knowing. Know this thing for yourself. Don't just trade because I know how to buy support and resistance. It is a manipulation. Okay, it's a manipulation just to trade off the skill. Don't just trade because there is a break and a retest. Okay, there's a knowing of liquidity. There's a knowing of portion. There's a knowing of direction. When you know these things and you begin to apply yourself, your risk management is going to change, your trading psychology is going to change, and eventually you're going to match up. Attitude is going to change. So with that being said, I'm going to see you guys on Saturday. Those of you in school, I'll see you on Saturday. In the market structure school, I'll see you on Saturday. I've done my review, so I'm not going to be alive tomorrow morning. Market review, because I just gave you guys a full review of what we are trading right now. So tomorrow morning, I'm not going to be live. For those of you who you're watching on YouTube and you're looking at, I'd love to, Kenry, I'd love to start. Okay, I didn't make the journey hard. There is within the next 3 months, I am not going to make the journey hard for a lot of people. I'm just going to look out for people who are ready. Okay, the live course right about now, and the live course for the promo price is ending at the end of this month on the 30th. Okay, which means from July, August, September, if you're going to get in on this same pattern of the market structure course, it's going to be $150 for the 4 weeks. It's actually 4 weeks, but I've been doing 5 weeks for $35 because we're on a promo. Okay, and the second batch for July is going to start on the 1st of July. If you're not there, take a dive. Invest in your trading. I don't call it an investment, but take a move, okay, and see how the journey takes you. But I tell you the truth, if you do, your next 6 months, it's not going to be the same 6 months ago. All right. So God bless you. Have a beautiful day. Bye-bye.